What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock, and we are literally 9 days away from the SoFi Q1 2025 earnings. And we know exactly what happened on that Q4 earnings last quarter, where SoFi stock sold off, 15% due to lower EPS guidance than expected. And if you saw what Anthony Noto, the CEO, said, he said, "Hey, we are pushing back, profitability for future growth. We see too much market share inside of Q1 and Q2." And that's exactly why the stock sold off, because they didn't meet the analyst EPS expectations. So it looks like Anthony Noto sees massive growth ahead for this upcoming quarter, Q1 and Q2. But the problem is, was he ready for the macro uncertainty that has happened over the past 2 months, due to Trump's tariff announcement? Guys, it's getting pretty bad on the headlines that I'm seeing. You're hearing headlines about Apple, flying iPhones, to different countries to not get hit with the tariffs. A lot of companies like a Tesla, have a big market share inside of China as well. And you're seeing this trade war go back and forth, and you're seeing, tariffs being raised by China and also the US, to 200, 250%. So guys, things are getting very, very crazy right now. A lot of companies are backing off their guidance, especially companies with massive supply chains. And you continuously hear about the recession coming immediately. And of course, banks are going to be the first ones to get hammered because people are not going to be spending. Loan defaults are going to rise. So what was Anthony Noto thinking, talking about going for an insane amount of growth for Q1 and Q2, even though they put out, a guidance for the year at 5% unemployment? We could get to 5% unemployment immediately. So guys, I want you to be prepared for this upcoming quarter on the worst case scenario. If these tariffs, spiral out of control, I mean, it could get very ugly for SoFi having to back off their guidance immediately. Who's to say that they won't back off their guidance for this upcoming quarter for Q2 and pull the Q2 back dramatically from where the full year revenue growth was expected to be? So this is something that you need to be prepared about, because in 5 days next week, we're going to get to the Friday's close, and you're going to have one more day to decide. Are you looking to have a longer term position? Are you going to trade this? Do you want to sell out because you think the stock's going to go lower? But I'm going to show you guys exactly what I'm talking about on these numbers. Not Q1. I believe Q1 is going to be solid. I think we're going to kill Q1, but I'm talking about this upcoming Q2 right away. The analysts have pushed us to the limit when I'm looking at the Yahoo Finance analyst expectations for just revenue right now. Of course, the EPS, has been backed off because, SoFi really backed off the EPS. But guys, revenue is no joke for what they want us to hit this next upcoming quarter, especially in this environment that we're in. Recession, tariffs, unemployment, talking about rate hikes. It's ugly out there right now. So be sure to smash the like button, drop a comment, subscribe to the channel. I want you guys to be ready for the worst case scenario. Subscribe to the channel. We're going to be keeping you updated daily. Let's get into the video. All right, guys, this is a brand new headline that just came out. Take a look at this. This is on Bloomberg. You can see first shockwaves of Trump's tariffs are about to hit the world economy. And you all know what that means. People are going to be, cutting back spending dramatically. Defaults are going to rise. Unemployment's going to tick up. Just a worst case scenario, it looks like, is what the headlines are saying. Okay, you need to figure out, what's going on behind the scenes. Is this true? Is this, shocking everybody across the board? Is it only supply chain? So I just want you guys to understand that, even though the tariffs have been happening for about 2 months now, they're really going to start to impact, people's pocketbooks pretty soon. And that is our Q2 guidance immediately. So guys, is SoFi insulated for these upcoming tariffs? I know companies like a Nike, Apple, are going to have way larger problems, but how large of problems is SoFi going to have? So understand, the tariffs, they're not going away yet. You got China 200% tariffs, US 250% tariffs right now. It's pretty ugly out there. No trade deals. I just want you guys to see the headlines are starting to pick up right now. And understand, guys, if we miss this upcoming Q2 guidance, it's going to be uglier than the Q4 earnings where, we backed off the full year EPS for 2025. It's going to be even uglier, okay? And these four analysts are going to have a field day. That is David Chiaverini from Wedbush, Baloney from Compass Point, Tim Switzer from KBW, and Jeffrey Adelson from Morgan Stanley. Every single one of these analysts are at $4, $5, $6 price targets, and they are going to light it up even more if we have a soft Q2 guidance, guys. So remember, these 4 separate analysts have published 30 plus sell ratings over SoFi's loan book and personal loans that are going to implode for the last 3 years. It hasn't happened yet. Nothing's happened, but these guys are not going away anytime soon. So if we miss the guidance, it's going to get ugly pretty fast. Take a look at the headlines on that last earnings report, where I was very upset about the soft EPS guidance, where management came out and said, hey, we're not worried about profitability yet. We're going to be going all in on revenue growth, market share. SoFi Technology stock sinks on soft guidance. This was January 27th. SoFi Technologies pointed to macro assumptions and giving weaker than expected quarterly and full year guidance. I mean, this was before tariffs even started to really explode once Trump took office, guys. The outlook offsets fourth quarter profit and sales that exceeded estimates, even though we may smash this Q1, which I believe we are. Q2 comes in soft. Those analysts are going to have a field day right away. And we'll get a refresh on this upcoming earnings report, exactly what Anthony Noto said to expect. And why the stock was tanking on that Q4 earnings. Here we go real quick.
I think the thing that the market's reacting to is our EPS is slightly below where the street was. And that's primarily because we want to make sure we're investing in the business for the long term and not just driving profitability in the near term. So we're committed to 30% incremental EBITDA margins, which is where we were in 23. 24 was a conservative year in which we drove to GAAP profitability for the first full year, and now we're tilting back more towards investment so that we can grow the top line for this foreseeable future over 20%. We actually took our guidance of the CAGR from 23 to 26 and revenue up relative to before based on that incremental spending. So feel great about the business. A bunch of huge milestones in the year.
All right, you see it. He's ticking up revenue, CAGRs. He sees a lot of market share up for grabs in Q1, Q2. They're ticking up revenue. And this was all before Trump pulled out the big board with hundreds of countries with tariffs across the board. That was before. So he said all this before that big board came out. And now you're seeing these headlines come out on Bloomberg with these tariffs. So guys, I'm going to get to what these analysts are expecting, because remember, we only gave a full year guidance 2025. We never gave a Q2, and these analysts are already setting in stone their Q2 revenue expectations. And I'm telling you guys, it is ugly when you have to compare it to what's going on in the headlines with the tariffs right now, guys. It's going to be an extremely tough guidance, and I'm going to show you that real quick. All right, guys, here we go. Q1 revenue. SoFi has put out their estimate at 725 to 745 million in revenue, and the Q1 revenue on the analysts 740. So they're not in the middle at 735, but hey, they're right there. Very solid on what SoFi is expecting. And the Q1 EPS 3 cents for SoFi, and the Q1 EPS is 3 cents for analysts. Okay, now here's the problem: we got unknown Q2 revenue for SoFi, because they give guidance right after the quarter. It's not like Robinhood, who has so much trading volume and crypto business that they don't even have to give guidance. But you guys can see right away, the analysts have already given us our revenue guidance, and that is $791 million in revenue. EPS, SoFi, of course, still unknown. And then the EPS, I think, is pretty solid for the guidance that SoFi put out at 25 to 27 cents. The EPS, 5 cents. So it looks like analysts are taking Anthony Noto's word on this, big, revenue tick up, market share gain. And I just want you guys to see what this 791 really is on paper. It is no joke. All right, guys, you can see right here the average analyst estimate, 739. Sales growth 27% for Q1. Pretty solid for SoFi. But look at this, guys. This upcoming quarter, Q2, the analysts want 791 million with all this tariff uncertainty, people talking about rate hikes, talking about unemployment skyrocketing, loan defaults, bank recession, debt rising, credit cards going to all-time highs. Look at this. They want us to put up 32.6% growth. This is what SoFi has to deal with on a regular quarterly revenue basis, with these analyst expectations, guys. I mean, 32% growth for a bank stock right now in this environment. I mean, tell me SoFi does not continue to get screwed every single quarter. Remember last quarter, we reported when we had that uncertainty around, DeepSeek, AI. Remember that? We reported on the exact same day where they were saying it's the same, models as ChatGPT or whatever, OpenAI. We reported on that exact same day, and now look at this, guys. We're reporting with these tariffs headlines, economy about to, collapse on Bloomberg, and 32% growth, guys. Do you see what I'm talking about now? Anthony Noto has dug himself another grave, it looks like. How is he going to be able to pull out of this one? We know that SoFi already likes to be extremely conservative on their guidance, always pulling back the numbers, always being safe, putting their unemployment high at 5%. They also have a GDP growth of 1 to 2% in their guidance. So who's to say they're not going to back it off to 0% growth, put in a recession at negative growth? That could happen pretty easily because they already did it in Q4, with those assumptions. So guys, how is SoFi insulated from these tariffs? Okay, I get hundreds of comments every day that SoFi is going to be the first to crumble, a bank, defaults rising. But also, you see on the other side that they just signed a new loan platform agreement extension with Fortress. So things are just not making sense right now. I just want you guys to see what type of growth we're dealing with for this Q2. 32.5% tariffs going bananas right now. I just want you guys to be ready, for the worst case scenario on the 29th, 9 days away. Now, if you guys don't think Anthony Noto dug himself a massive, massive hole that, there's no telling that they're ever going to get out of for this upcoming guidance, I took five of the, largest SaaS companies inside of the market right now, growing insane. We all know how the SaaS industry is growing, how they get those multiples. All of them are 20 to 35% revenue compounding growth, and that's why they get those crazy multiples. You guys can see I'm looking at Cloudflare right now. I'm also looking at Datadog, also looking at Snowflake. We also have Zscaler, and we also have Palantir, guys. I'm looking at each and every single one of these companies Q2 guidance, and wait till you see how it stacks up against SoFi. We just put SoFi in at what, 33% growth? All right, guys, take a look at this. This is the Q2 revenue guidance for the SaaS industry. Remember, SoFi right around 33% growth. Cloudflare is expecting Q2 revenue growth of 25%. Datadog is expecting Q2 revenue growth of 19%. Snowflake is expecting Q2 revenue growth of 23%. Zscaler is expecting Q2 revenue growth of 19%. And Palantir, Q2 revenue growth of 33%. Price to sales over 50x. We are literally having to compete right now with Palantir on a revenue growth aspect, and our stock is in the gutter. We have to put up more growth in each and every single one of these companies right here, guys. Do you see what I'm talking about for this Q2, guys? Anthony Noto was not prepared for what's going on inside of the economy. I personally believe he was not expecting the tariffs to just blow up like this. I don't understand how SoFi can be insulated right now when you're seeing, headlines of, recession, defaults rising, unemployment skyrocketing. I just don't get it. But we are in this situation again, just like we were in the last quarter. We had to report during the DeepSeek crash. We have to put up faster growth than 99% of the SaaS industry right now. So that's where we are right now as a company. I just don't understand the bad luck that SoFi continuously gets each and every quarter. But hey, we're signing deals on the loan platform, but we know how SoFi likes to guide their conservative guidance. What if they, tick up their unemployment to 5.25, drop their GDP estimates from 1 to 2% to 0 or negative? I just want you guys to see we have to grow way faster than the SaaS industry right now. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. Once again, we're going to be keeping you updated on all the breaking news with the SoFi stock. Earnings is less than 9 days away. Be sure to smash the like button, drop a comment, subscribe to the channel. We'll be keeping you updated daily. Hope you have a great day.